$60,000 of cash flow to come into their household to allow them to maintain their lifestyle. They've taken a delayed strategy. They've optimized Social Security for their household. Maybe they spent some of their pre-tax money or filled that gap or worked a little bit longer, but they took measures to basically get higher checks, higher Social Security checks than lower ones because they made some good claiming options. Okay, they've got $40,000 coming in from Social Security. They need 60, so they're going to have to make some distributions from their IRA accounts, for example. In this case, we're going to keep it real simple: Social Security and pre-tax accounts like an IRA. So $40,000 coming in from Social Security. We've got $20,000 coming in from an IRA for a total of 60. The provisional income calculation takes half of Social Security benefit. So in this case, $20,000, which is half of 40. Adding in the IRA distribution of 20, the provisional income at this point is $40,000. Now, $40,000 worth of provisional income breaches the $32,000 threshold by $8,000. Now remember, if you breach that first threshold, half of your Social Security benefit then could be subject to tax. In this case, $8,000 that has breached that threshold divided by 2, or 50% of that, is $4,000. So $4,000 of their Social Security benefit is subject to tax at their next highest marginal tax bracket. Now, their next highest marginal tax bracket is said specifically that way for a reason. Sometimes we can do enough planning to get somebody in a position where they don't have to pay taxes on Social Security, but it's very difficult unless we worked with them for many, many years. But even if your Social Security benefits, like these folks, are subject to be taxed, or at least part of it, if you can control your next highest marginal tax bracket by doing some strategic tax planning, you can still reduce or potentially reduce the taxes you might pay on your Social Security benefits that are destined to be taxed at your next highest marginal tax bracket. So in this case, $4,000 are subject to tax at my next highest marginal tax bracket. I didn't breach the next threshold of $44,000. Therefore, only 10%, $4,000, of my $40,000 Social Security benefit coming into the household is subject to tax. Very small percentage. Now, if we take a different approach and we claim early and we get smaller checks, theoretically over a longer period of time, but we have to fill a wider gap because we didn't take a delayed strategy. We have $20,000 of Social Security coming into the household. We have to make larger distributions from our pre-tax IRA, IOU accounts. And in this case, we've got a provisional income that is half of Social Security, or $10,000, added on to the $40,000, which is a distribution from our pre-tax accounts like IRAs. That gives us a provisional income of $50,000. Did we breach the first threshold of 32? Yes, we blew all the way through it. So from 32,000 to 44,000, that's $18,000. Half of that, or $9,000, is subject to tax at my next highest marginal tax bracket. We actually launched through the second threshold as well, and about $6,000 above that. So we've got another $2,100 that's subject to tax at my next highest marginal tax bracket. That means that $11,100 of my $20,000 Social Security benefit is actually subject to tax at my next highest marginal tax bracket. That's about 55% of my Social Security benefit now is actually subject to tax at my next highest marginal tax bracket. And it's just a matter of how and when you distribute resources and how you coordinate your Social Security benefits with your other retirement resources, which unfortunately Social Security is not allowed to give advice on. So if you want to know how much of my Social Security check will be subject to tax at my next highest marginal tax bracket, and is there anything I can do about it, write that down. We'll give you an opportunity to talk to us here at the end.